Hey guys, this is Becca and welcome back to my channel. Here on my channel we talk about money, budgeting, and more. And today I am sharing the financial details of the house that my husband and I purchased earlier this year. If you haven't seen my other video describing just kind of why we bought and our motivators for that, I will link it up above and you can check that out. But we are first-time home buyers. I'm in my 20s. I'm 23. I was 22 when we closed, and Jared is 31. So this was our first house purchase, and we live in the North Texas area. And this house is in the suburbs. It's a 2-bedroom, 1-bath, about 1,000 square feet, very small home. So these are all the details. So we purchased we purchased our home for $185,000, which, depending on where you live, can either seem like a lot or not a lot. To me, it felt like a lot for what we were getting, but based on the area, it's like the cheapest thing in the area, and I think it was actually a pretty good deal. We purchased without a realtor. It was kind of a handshake agreement thing. And so I came up with this number. I offered this just based on research I'd done and comps from other houses that were selling in the area. And we had a 30-year fixed rate conventional loan. So we put down 5%. So the amount that we were lended was $175,750, and our interest rate is 2.875%, which obviously is a very low interest rate. It wasn't as low as what else I've seen just right now, because a lot of interest rates are really low, but it had to do with us being first-time home buyers, my husband not having any prior credit because he's never had any loans. Can't imagine. But so that's the interest rate we got. This is the portion of our payment that is our monthly principal and interest payment. And I will also share the amortization breakdown so you can see how much that is. But the principal, that's the principal and interest portion. I'll move this up, sorry. And then the mortgage insurance, since we only put 5% down, we have to pay private mortgage insurance until we reach 20% equity, and that is $48.33. And I would not recommend putting 5% down. I know that this is very controversial and everyone has a different opinion. I personally am of the mindset that debt is bad, and I would have liked to put more down. It just wasn't feasible for us at this time because we kind of purchased the house out of nowhere. If you don't know, we are not actually living in it yet. We have it rented out because our own lease in the apartment that we're in cost $4,000 to break, and we didn't want to break it. So we decided to rent out the house until we were able to break our own lease, or like get out of our own lease, which is in March when the term is up, and then move in. But so that's when we were planning on buying. It just didn't work out that way based on timing, and we knew that we couldn't outstay the market. Just where we purchased is a very hot market right now, and they're working on some construction for a toll road basically to our neighborhood that will make the prices skyrocket even more. So we wanted to make sure we purchased before that happened. So that's kind of the backstory on that. But because we only put 5% down, that's our mortgage insurance, which honestly, this is a very small number. I know a lot of people have to pay hundreds of dollars, but since our house price was so low, ours is just $48. And then this is our escrow amount for the first year until they kind of reevaluate. And it's $382.83. So our total monthly payment is $1,160.33. Sorry, I was looking at that like, what? And then our escrow, so the breakdown of that is $100 of that is our homeowner's insurance, and then $282 a month is taxes, property taxes. And I know a lot of people are probably like, wow, that's really expensive for property taxes. And it is because we live in Texas. So in Texas, there is no state income tax. So the property taxes are bananas. I know that some people are shocked by like a $5,000 property tax bill over a year for like a $400 to $500 house, but that's how much it is for a $200,000 house here. So you pick which tax you pay, but you're gonna pay them no matter what. And this is just the reality for where we are. So that's kind of an explanation for that. Honestly, I don't know why our homeowner's insurance, this felt cheap to me, $100 a month, but then when I look at other people's, I see that they have it way cheaper, so I don't know about that. And then our closing costs. So this is kind of confusing. Our closing costs are $9,042, but then our cash to close, which means all the money that we need to bring to the table, was only $6,324.51. And this is because we actually had a gift from a family member of $8,000. And so that was not included in our cash to close amount because like they sent that separately. So this was just how much we had to bring to closing. So the total amount really cash to close was this plus $8,000, which is $14,000. So very low cash to close because it is a more affordable house in a with a low down payment. So I just blocked out some of the private information and I put it in this really festive washi tape. I thought it was appropriate for the season. And I will just go through all of these costs. So we did not use any points to lower our interest rate since the interest rate is already so low. We didn't see the need to buy any points. Our processing fee and our underwriting fee are both paid to our mortgage lender, $695 and $600. Our appraisal, we paid that. It's listed here because we paid it before closing, and they told us it would be $700, so $525 was much better. Although honestly, because the house was so cheap, I feel like it should have been lower, but whatever. And then our credit report fee, and doc preparation fee was $125. Flood certification is $7. Tax service fee was $64, and we didn't really get to choose these. They just were what they were. And I just blocked out who they were big to, just because since instead of using a real estate agent, because we just did a handshake agreement, we used a real estate attorney and we paid her a fee and then used her services, and I just wanted to keep that private since she's an individual person. And then this is on it. Okay, so it says services borrower did shop for. We didn't. We just paid what was there. But this is all for the title. So we had to pay $30. We split some of these with the seller. So this first one was document delivery, and we split the cost with the seller. So we each paid $37.50. They paid $175 for title doc prep. We paid for the lender's endorsement, obviously because it's our lender, for $255. Guarantee fee we split with them. We each paid $2. We got lender's title insurance, and we paid $12.31. But actually, the seller paid for this, and it was like written kind of weirdly, but they paid for that. I don't know why it's like this. And then that just protects us in case there's any weird title stuff that came up. I just felt like we should get it. I am a big fan of being better safe than sorry. And then the recording service was $8.50. We split the settlement service, each paying $375, and then they paid for the tax certificate at $38, meaning that our loan costs at closing were $3,412.32, and we'd already paid $525. And then our other costs, so the recording fees we had to pay to record for the deed and the mortgage, $148. And then our homeowner's insurance premium, we had to prepay $1,484. And this is more than our actual policy is like $1,206. But because we used our lender, like sent our info to all of these like people who set up the services for you. So instead of just shopping around for homeowner's insurance, which I was perfectly happy to do, I got a call from like, we have an insurance agent apparently at a different insurance company who like did all the shopping and found us the best rate, and they actually charge like a $280 fee. So I was like, well, that wasn't even very cheap then, but that's just a one-time thing, and then every year after that we won't have to pay that like finder's fee basically. And then we didn't have to prepay for mortgage insurance, which is PMI. We had to pay prepaid interest of $304. And then we did not, oh yes, we did, I don't know why property taxes is lower, but that was like that amount. And then separately, we also paid an additional 3 months of homeowners insurance that they keep in our escrow account, which we had to escrow our property taxes and homeowners insurance because we only put 5% down. But as soon as it's an option for us to not escrow that, I would prefer to keep it myself, simply because cash in my hand is better than cash in someone else's. And I would rather earn the $10 of interest per year than have it sitting there, because I know that I'm responsible enough to make sure it gets paid on time. That's just a personal preference. Everyone's different. But like, that's how we keep our taxes out for my husband, who's self-employed, and then we pay our quarterly payments. And I like that because we gain a little bit in interest and we have extra cash in the bank in case we had an emergency. And we prepaid property taxes for a whole year, which was $3,387. But we had the first like 9 months of the year. So all the time up until we purchased, the seller gave us the money to cover like 9 of those months. So our portion was actually much smaller. And then I don't know what this aggregate adjustment was. I don't know. Honestly, couldn't tell you. And then the title owner's insurance was another thing, and the sellers paid that, and it was $149. I know it's very popular for like you to ask the seller to pay some closing costs, but right now in this market, that's not really a thing. So we paid all of them except for the few things that were just like usually split. And then, so those are the total other costs. All of that equals $5,324.44. And so our total closing costs were that and that together, $9,042. And I feel like that was a little bit high for the house price. For our house price, they say to save between 2 and 5% for closing costs, and ours was higher, mostly because property taxes in Texas are so high. So that math just didn't quite work out for us. It ended up being on the high side of that. And then we had a lender credit of $219. I don't know why, we just randomly did, but that was that. And then I think the last page is this, which shows kind of just the breakdown right here. Oh, wait. We don't really need that breakdown. I'll just show you this breakdown. So this kind of gives you a clearer picture because we paid a $1,000 deposit, and that was actually part of the gift from our family member. Just to show the seller that we were serious, we put that down when we like gave them the contract. Our loan amount again for $175,750. Here's the adjustment for the owner's policy paid by seller. So they paid that, and it was $1,131. And then taxes, all of these taxes were paid by the seller. So they go in here as if like they are an adjustment to mean we owe less. And then gift funds, this is the rest of the gift from our family member. So this shows you total due from borrower at closing. This is the total amount over the house price that we have to give to like the seller, basically. And then this equals this 187 is our loan amount and all of these other costs. So our loan amount plus the deposit we'd already made, the gift, and then all the credits from the seller, meaning that this is how much we had to bring to the bank, which was not very much, honestly. It's very cheap. And so that's all of that. And then I'll show you our amortization schedule. I love these. And I'll also tell you, so this is like the term of our loan again, and then our payments. So our payment for like the whole right now, as I said, was $1,160, but we're actually paying an even $1,200 at this time because, and this is also something that's like highly debated by people in the like financial space, is do we pay off our house early, or do we try to pay off as little as possible because we could get more somewhere else from investing? And I completely get that in theory, that if the interest rate on my house is only 2.875% and I could get 6 to 8% in the stock market, I should take the extra amount that I would put towards the mortgage and instead invest that. But I personally don't want to do that. And I'll tell you why. I hate looking at how much interest you pay over the life of your loan. Let me just tell you, it shows at this little thing. Okay, if we stick to our 30-year schedule and we never paid more principal, we would end up paying $271,000 $191. So the house was only purchased for $185,000, which means that $93,000 of that is just interest. And I don't know about you, but it really bothers me to think about paying $100,000 in interest. I don't really want to do that. I would love to pay off the mortgage early. So our plan actually is to pay $1,200, and then when we move out of our apartment into our house, we are going to try to pay the amount that our rent payment is now. So technically our rent is $1,334, and then like if you watch my budget videos, you know that plus water it's $1,450, so the rest of that is water. But the actual rent portion is $1,334, and our payment is $1,160. So that's almost a $200 difference, which is why we bought the house, because I was like, that's way cheaper and you can actually get some equity. But we are going to try to start paying that much just on auto pay to kind of get rid of this principal early. So that's our plan. You can let me know down in the comments what your plan is and why. Everyone's different, and I don't judge. That's just personally what I thought would give me the most peace of mind. So this schedule shows you every payment. So there are like tons and tons of pages because there are 360 supposed payments if you took 30 years to pay off your loan. So I like drew a line through every year, basically, like every 12 payments equals a year, and I just did that because there was a lot of payments and it helped me to break it up. But you can already see that I've highlighted our first two payments because I have already made them. We had our first payment in November, and then December was our second payment, and this is how much went to interest is $421.07, and our principal portion was $308, and then our mortgage insurance was $48. And that shows you our balance. Our balance is actually lower than that because, like I said, we paid $1,200 for these two, so only $80 less. But like it'll start to add up. And my goal, I don't really know kind of how soon I'd like to pay it off. Obviously, we have a lot of other kind of financial goals that are more important, but I just wanted to make steps to be like consciously putting more towards the mortgage, because this isn't our forever home, and when we sell it, if we sell before we buy a new one, if we don't keep it and rent it, I would like to have a much bigger down payment, and basically any extra money put towards principal acts kind of as if it's in a savings fund, which is really great. So that is all the details about our home buying purchase. If you liked this video, please give it a thumbs up and subscribe to my channel. You can leave me a comment down below telling me anything you want, and I will see you guys next time. Bye.
Find myself on that old familiar pathway that leads me down that same old beat. But every day I find I'm leaving empty with water.